In a recent 13F filing with the SEC, the state of Wisconsin Investment Board disclosed substantial investments in digital assets, including $99.2 million in the iShares Bitcoin Trust and $63.7 million in the Grayscale Bitcoin Trust. Well, the board's portfolio includes investments in leading cryptocurrency firms like Coinbase and Marathon Digital. So what does it mean for the future of Bitcoin and crypto? Well, joining me now with more is Marathon Digital's CEO, Fred Thiel. Fred, thank you so much for joining. And I see the state of Wisconsin, the investment board did recently make this investment, $163 million in Bitcoin ETFs. How do you think that validates Bitcoin from an institutional perspective?
Well, I think if you look at the ETF investments that have been made by institutions that have over $100 million in assets under management as recorded using the recent 13F filings, about 11 billion of the $66 billion in Bitcoin ETFs currently is held by these institutions, which is a significant amount when you realize and compare it to gold ETFs and how long it took for institutions to build positions there. So clearly, there's a huge appetite for Bitcoin from these institutions. As many financial analysts and advisors have said, a risk-adjusted portfolio with a low 1 or 2% allocation to Bitcoin significantly outperforms the standard 60-40 portfolio. So I think we're going to continue to see more of this, especially in coming quarters. Many institutions are still really just looking at this and just getting started. So I think this will be a continuing trend over the coming quarters, and provided Bitcoin continues to perform and maintain its relatively low volatility compared to historical norms, we'll see more and more interest, more and more institutions coming in. And we've already seen some of the large banks, Morgan Stanley and others, also with large Bitcoin holdings, according to their 13F filings.
What do you see as the risks associated with this? Bitcoin not quite at an all-time high, but certainly is, I think, a gauge of risk that we see, risk appetite in the market.
So Bitcoin behaves as a very uncorrelated asset compared to many assets because it really depends on the situation. So as money supply expands, which is something that many people expect to happen here in the near future, as the Fed will start lowering interest rates, they've already stopped QT. And so you're starting to see more liquidity come into the market. That tends to drive more interest in risk assets, which Bitcoin is one of. But also Bitcoin sometimes correlates to gold, which is typically an asset people go to when risk is off. At the same time, it works very well as a hedge against inflation. Bitcoin is up significantly this year already compared to most other assets. It's one of the leading assets from a return perspective over the past 11 to 15 years. And I think asset managers are starting to get an appetite to try and hold a little bit of their AUM in Bitcoin and really experiment. And this will be a period of trial. You'll see people kind of steadily coming into it more and more. And there are lots of different ways for these fund managers to hold Bitcoin. There are ETFs. They can also directly hold the equities of Bitcoin-related companies and crypto-related companies. They could potentially, even in some cases, as the CME now is pondering offering spot Bitcoin with leverageability, you'll start seeing hedge funds and institutions look at that as well. So I think we're going to see a lot of different variations in testing, but the fact of the matter is the appetite is there, they're investing, and that can only drive Bitcoin price higher because Bitcoin is a finite commodity.
So I want to talk more about Bitcoin as the commodity, as the means of interaction versus the investment, right? Certainly there has been a lot of momentum, and I think wind at Bitcoin's back, as we've been discussing, including with the regulatory approval earlier this year. But do you anticipate that the use of Bitcoin, that using Bitcoin as a currency to transact with, will change, and if so, how?
So there are two different use cases for Bitcoin. One is in the developed world, where it's primarily used as a store of value, as we've just been talking about, institutions putting assets into Bitcoin and holding it as a store of value. In the developing world, it is used more as a currency. You have people in parts of Peru, Costa Rica, Nicaragua, and other places where they're building circular economies using Bitcoin as a way to transact, especially countries with very high inflation, where the currencies are devaluing. Argentina, for example, Egypt and other countries like that. People can hold their money in Bitcoin while the fiat currency in their country destabilizes and declines in value significantly. And then people can start transacting. In places like Dubai, you see people buying cars, you see people buying real estate with Bitcoin. And over time, you'll see more of this. However, when there's volatility in a currency, it's not something people want to do to use for spending. I don't think you'll see many people in the US pay their rent in Bitcoin or necessarily pay for gasoline in Bitcoin. They may hold their savings in Bitcoin and then transfer some of it into fiat currency and then use that fiat currency for spending. But I think Bitcoin as a currency in day-to-day use in the developed world, we're quite a ways off from that happening. It's really primarily a store of value.
Yeah, we've been talking a lot about regulatory approval. When Bitcoin was really taking off just a few years ago, I would say in the spring of 2021, the conversations were also happening as to a digital dollar by the Fed. China obviously is advanced ahead of the US when it comes to a digital currency there. But what does the development of a digital dollar potentially mean for the value of a currency like Bitcoin?
Well, we actually really have a digital dollar today. Every time you use your credit card, your ATM card, anytime you're doing an ACH transfer, a Zelle transfer, that's all digital dollars already. So there's no need for the U.S. to come up with a central bank issued digital dollar. The fear actually for most citizens is that were the central bank to do that, you would have an ultimate surveillance tool on people's economy. The average American doesn't want to have the risk that if they behave in a way that's not in accordance with particular rules, that potentially their money could be taken from them, that their money, their ability to spend could be stopped. That's essentially what happens in China with the currency. China's a country where you have a social score, and if you misbehave socially, things could happen to you and your finances. In the US, I think it would be a big issue if we had central bank issued digital currency that provided that level of surveillance. I know certain members of the Democratic Party really are pushing for this, but I don't think most people would want it because there's no additional benefit to US citizens over what we currently have in the fiat dollar system, if we're now going to be dollar denominated, compared to what you can do today with your bank. You can transfer money from your account to somebody else who's using your cell phone. You can buy tickets using your cell phone. There's Apple Pay, et cetera. So there's no advantage for the average citizen.
Do you anticipate that we will see Ethereum ETFs also get the green light from regulators?
Not anytime soon. I think clearly the SEC has not been having correspondence with the ETF applicants, which you saw leading up to the Bitcoin ETFs being announced. You also have serious concerns that have been voiced by the SEC, especially Chair Gensler, regarding potentially Ethereum being a security. Now, he hasn't come out and said it, but he also hasn't come out and said that it's a commodity. Meanwhile, the CFTC has clearly said it's a commodity. So I don't think there's clarity yet. I think there's some way to go, and we'll just have to wait and see.
Mm-hmm. What would that do to Bitcoin ETFs if an Ethereum ETF does get approved?
I just think it further legitimizes it. Bitcoin is the biggest cryptocurrency or digital asset by market cap. It continues to grow in scale and use. And I think we're seeing more and more developers developing applications that run on the layer 2 of Bitcoin, similar to what you see in the Ethereum world. So I think really they compete from an application perspective, but from a monetary perspective, I think if Ethereum ETFs are approved, that'll only drive more interest in Bitcoin ETFs.
Fred Thiel, CEO of Marathon Digital. Fred, thank you so much for joining.